Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions and any trades and any questions you might have or any trades. My goal is to answer any questions about subscription, to go over what to expect in the market short term, medium term, long term, and what strategies work, what strategies do not, what are my favorite strategies in this market. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. Since I left Options Express, I work as a consultant and investor in several financial technology firms here, several startups in Chicago. Started Tradespoon in 2012. I've been managing my own money for over 20 years now, mentoring and teaching subscribers how to trade stock and options, and finally I have a master's degree in computer science. Disclosures are very important. I do see new names, so please type in first if you're new. Or this is your first live event. But if you're new to Tradespoon or you're new to Yellow Tunnel, options, please visit optionsclearing.com. This link on the slide. You can always pause the screen if you need more time to read the disclosures to understand the risks associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my risk tolerance level for general education information purposes only. Please consult a financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, before we get into trading plan and what are the main concepts, let's go over the market and what to expect. So unemployment, again, the idea of good news are bad news and bad news are good news, kind of, that's the theme, right? The idea that the market rebound, right? We had a pretty impressive rally from the 52-week low, right, of 6%, right? So we broke through 52-week low, we broke through June, July lows. Let's look at the weekly. This is a weekly chart. So we were at 361, 362 on Friday. Last Friday, we broke through that level at 357. We had a pretty nice rebound to 360, and now we're trading as low as 360, right, this week. Currently trading at 365. So the bad news, the good news again today, that the economy, the unemployment rate actually dropped, I think, from 3.7 to 3.5. Labor participation also dropped. Wages continue to be, high. So the idea that the rally happened on the hope that the Fed will pivot sooner than later, right? The Fed will pivot sooner than later, and same thing, quantitative easing, right? Similar to Bank of England and Bank of Australia announcing that they're raising interest rates less than expected, or they are stimulating the economy by providing, massive tax cuts. The same idea will happen in the United States. So based on macroeconomic data that supports the view of quantitative, of slowing the rising of interest rates, then there is a hope of that pivot occurs and market and economy is still resilient and we rally. If we have a data point like today where it's worse than expected, the data is better than expected, and then you can see that the 10-year yield is back to almost 4%, 2-year yield is almost back to 4.5%, and dollar is a little bit stronger. So semis are down 4%, QQQ down 3%, spiders down 2%. So what do you expect next, right? We're first week in October. We're approaching midterm elections in 3 weeks, 4 weeks, midterm elections. We have earnings season starting next week, right? And we have CPI data, right? So same thing. If the CPI data is stubbornly resistant, right, just like unemployment next week, Tuesday and Wednesday, Wednesday and Thursday, I think we're going to have PPI and CPI data. Same thing, market will pull back again. If it's showing signs of reprieve, then the market will rally. So there are two different scenarios, right? Right now we are trading at 365, right? We're as low as 365. The support is 357, right? So where will the market go next, right? We did have a pretty strong rebound, right? For the Monday, Tuesday, Wednesday, and Thursday, 4 days in a row, we haven't made new lows, or 5 days in a row, we haven't made new lows. We have rebounded around 6%, so similar pattern to June low, right? We hit the June low, we rebounded about 8-9%, then we pulled back, right? And then traded for a couple of weeks in that range, double bottom, right? And then we rallied into, right? So that's scenario one. Scenario one is that whatever happened in June, July, similar setup is going to happen October, November, December, right? Maybe we have another week of down, right? Maybe higher, maybe lower. We don't know, right? It depends on CPI data. And then we have, after that, another maybe stabilization candle. And then we have the midterm elections, right? Earnings season starting, midterm election, and all the bad news already factored in, and and then the market rallies into the end of the year, right? Maybe we end the year. A lot of people are projecting 380, right? So something like that, right? So that's scenario number one, right? That's scenario number one. Because of the strong rebound, we either already posted this year low or close to it, maybe 350, maybe 340. The second scenario is something similar that we had in March, February, right? Or in, I would say, May, right? May. So that's scenario number two. Scenario number two, market undershot, right, in May by 5%, what it was in February, right, when the war between Russia and Ukraine started. Undershot by 5%, maybe even more. Had a strong rebound from week one, week two, week three, strong rebound, and then instead of going higher, like everybody anticipated, that came out and got more hawkish, and then the market undershot, from 380 to 365. 380, 365, roughly 5-6%, right? So 5-6% from the low, I did some calculation, is 337, right? So around 337, which corresponds to basically February high of pre-pandemic level, right? March of 2020. It actually corresponds to the model, the long-term model that we're running on Tradespoon, the stock forecast toolbox, where based on neural networks, right, artificial intelligence model learns and trains on the data every day, right? It gets optimized every week in terms of the algorithm, and it makes prediction. But the data for the 6 months is stale. Predictions are stale because in order to make new predictions, you have to learn a new data point, and each data point is 1 month, right? It's explained here that each data point is 1 month, and it's updated only on the first of the month. So the model actually predicts that, we're still trading lower, going into the next year. We're probably going to create new lows and drop as low as possibly 300, by March, April, May timeline. So there's still strong downward pressure. And for months of October, we could potentially reach 337. So model does call out the idea that we can reach 337, right? And that would be scenario number two, right? Scenario number two, we have worse than expected CPI, we have worse than expected earnings, and then we don't have a rally, midterm rally or Christmas rally like we usually do, right? And then the market drops to 337. And then rebounds back to obviously a lower high, maybe to the current 380 level, and then continues to drop, into the next year, right? So you have scenario one or scenario two, right? So lower high, lower lows. Scenario two is similar to what happened in May, kind of a fake rally, Mainly this was Fed reiterating that we're going to continue being hawkish. So in my view, there's scenario 1 and 2. There's definitely signs of bottom building process, right? We have 1 week. We have week 1. We're not posting new lows. Let's assume next week on CPI and earnings, we're also not going to post new lows or stay lower. So then we can have this kind of stabilization, right? 3 weeks, either like this or here, similar to May, right? Similar to May price action or similar to June, July price action. So let's pose that question to everyone, and because this is very important, right? You know, are we going to break out of this range, right? From 380 to 357, are we going to break to the upside and potentially reach, you know, somewhere close to 400, what Stock Forecast Toolbox is predicting to be the high, right? Or are we going to break down and reach what the low market is predicting, which would be around 337, 335? Which scenario is going to happen? If you're short-term, medium-term trader, right, you think about October, or you think about November, or you think about December, right? These are important questions, especially if you're an option trader. You need to have, you know, view on which expiration months to select. What, you know, are you doing calendar spreads? Are you doing verticals, butterflies, iron condors? If you're not an option trader, if you're a stock trader, you know, obviously, if this is the bottom and market is going to be at 480 by end of the next year, well, this is the time to buy, right? Or if you think market is going to, you know, reach 337 and next year reach the, you know, 300 level, well, maybe it's too early to buy, right? So very important question. Let's pose that question to the audience and let me know which scenario is more likely to occur. Scenario number 1, where we have June, July rally of anywhere from 10 to 20%, or do we have a false, you know, 6 to 8% rally like we had in May with another drop and posting, you know, new lows for this year? All right, Mark, thank you for participation. 1, okay, thank you. Alan, Andre, Bernard, Clayton, DLC, Don, Doug, Dr. Dow M. Lee, Kevin, Mark, Paris, Patrick, Peter, a lot of traders, Vitus, William. Why? History is strongly toward 1. Okay. Done. Okay, got here late. Welcome back, Don. Doug, 2. Okay. Anyone else? Not a lot of participations. 1. Okay. Anyone else? So more 1s. Okay. You guys can take a little bit more time to make a decision. The idea is 1, right? The scenario is 1, and that is my opinion too. You know, on Friday I would probably say 2. Last Friday I would have said 2, but after 6 to 7% rally, I'm gonna say 1, right? Maybe it's not as strong as June, July, right? Because, you know, the idea is, I think it's more of a trading psychology, right? Fed already reiterated that, you know, they will keep raising rates until inflation will start dropping, right? They reiterated this in January, February, then they, you know, in April, everybody thought they are joking around. You know, it drove the market again in April. Then, you know, in May, same thing. They have to reiterate for the market to drop, right? So at this point, I think people are conditioned to realize that, you know, until Fed actually comes out and say we're done, right? Or we're going to pause at least they're going to say pause, then the rallies will be limited, right? But nonetheless, you know, after 1, 2, 3, we are conditioned to kind of expect that CPI data is probably not going to be better than expected. We are we're conditioned that Fed is probably going to raise 75 basis points in November and maybe 50 points to December. So there is no new information at this point. As long as market is oversold, right? The market is oversold at these levels, right? We just dropped from 430 to 350. Market is oversold. From this, again, seasonality point of view, right? Who said that? trader. Sorry, it's just a trader. But history, indicates seasonality indicates that after midterm elections, and assuming there is no black swan event or no new information, that we should have one, and then the drop continues on 2023 because the narrative is going to change. At some point, Fed will pause, right? The inflation will drop, but is it soft landing? Is it hard landing, right? Because the soft landing scenario, right? Goldman Sachs just outlined in their research paper. Soft landing, they're calling 337, 340 as the bottom. Hard landing, I don't know what they're calling, but I think 300 or somewhere along this level, right? So hard landing, right? Somewhere between 300 and 280. So it all depends what are the effects of raising interest rates, right? When mortgages are 30-year mortgages approaching 7%, when rents doubled, right? When wages are way behind the behind the rates of inflation for food, services, rents, car payments, then my tax bill just came in, it doubled, right? I live in Chicago, literally, without exaggeration, it went from X to 2X, right? And all my neighbors. So when your tax bill doubles, right? And I'm sure that's not only in Chicago, but in other areas, people are going to spend less, right? I'm not going to buy a new car. I'm not going to buy a new TV. I'm going to go on less vacations, etc., etc., etc. Right? So, what is the extent of the inflation? How long is it going to last? And what are the narrative changing that at some point, right? Unemployments are lagging indicator. At some point, unemployment will start rising, right? Because companies' margins and revenue is shrinking. The only way is to cut the budgets, right, on marketing, right? So the Googles of the world and Facebook, metaverse of the world will continue to drop, right? So everything that's related to marketing will drop, and then you need less computers, less servers, semiconductors are dropping, right? AMD dropped today, and 7%, some kind of crazy numbers. 9%, right? AMD, just on the warning that, already, AMD is already at February of 2020, right? So, how long will the inflation last, and what are the impacts of raising interest rates and inflation, right? And most likely it's the hard landing scenario, right? So if you think it's hard landing, we're not close to the bottom. If you think soft landing, we're probably close to the bottom, right? And when I say close, 5 to 10% from current levels. Hard landing, it could be another 20% drop from current levels. All right. Recession muted was Kiasno outperformed. Thank you, Doug. Kevin, OPEC plus, right? So OPEC rate, so right, and crude oil, right? That's another, one of the reasons market rallied, right? One of the reasons market rallied because the oil and gas prices at the pump significantly dropped, right? Now they're, kind of vertically moving higher. That means, another tax on, not only I'm going to pay twice as much, for my taxes, or for the rent, but I'm also going to pay twice as much at the gas pump, right? Or twice as much for the gallon of milk, etc., etc. Okay. Any questions? Thank you, Kevin. We'll see how far oil and gas will rally, right? The idea that, right, OPEC on one hand, removing 2 million of barrels from supply. From what I've heard and from what I've read, it's not going to happen overnight, or if it's ever going to happen, right? Or it's going to happen slowly. But once we get these inventory numbers, and especially if demand drops, I think oil prices will reverse down, right? Because if demand drops, you got to cut a lot more than 2 million barrels. But this all takes time, right? It's a process. It's a process. Inflation is a process that doesn't change overnight, and it doesn't change over 1 or 2 months, right? It's been 10 months and still very little signs of inflation abating, right? So it's probably, it might take another 10 months for finding some kind of a bottom in the inflation. Mark, yes, my question was on VIX. I do believe, and that's a majority, that's the consensus, right, that any type of recession usually ends up with VIX spiking above 40. We haven't seen that, right? VIX, last week it got to 35, right? That's been the range for the past, I mean, it's 2 years, right? Since June of 2020. We haven't had a spike above 40. The question is the spike going to happen this year or next year? Last Friday, I was concerned that it will happen this year. After 6% rally, I don't think it's going to happen this year. I think it's going to happen next year. I think the narrative has to change, where the earnings season starts next week. If the earnings already reflected high interest rates and revenue is becoming negative, right? Right now, the expectation, we're still growing, S&P 500 companies are growing in lower single or, digit numbers. If JP Morgan, Diamond Semiconductors, Delta Airline come out and say, listen, our earnings are negative, and that's not what Street expects, then we will have a VIX above 40. The question is, will it happen this year, in October, or will this happen, or will it take another 1 or 2 quarters and it's going to happen, in January or April, right, when we have the next 2 quarters? Most likely it's going to happen, if I have to guess, it's most likely it's going to happen either, in January when the earnings season starts, or in April when, Q1 earnings starts of 2003. That's my expectation. This is why I said that my preferred scenario, or the scenario that I'm going to trade on, is scenario number 1, but I do realize that scenario 2 can happen this year. I do realize that it can happen. I would say I'm 70% confident that it's not going to happen this year, and 30% confident that it will, right? So that's kind of my opinion. Mark, hopefully I answered the question. Oils are good play. I don't know if I would chase the oil at this point. I prefer to buy in pullbacks, right? It's a pretty strong rally, but obviously I'm neutral to bullish, right? I think we're going to have this 3 weeks of consolidation, and then in November, December we will rally. So I would probably wait till after midterm election to start chasing oil. At this point, I would buy oil on pullback, right? If something happens, we get inventory number on Wednesday, we have CPI data on Wednesday, and oil drops to 130. Okay, that's a good buy. 145, you're chasing it. Then I personally would not do it. Doug, thank you. Mark, thank you. SJT Royalty Trust. SJT. Guys, trading all the San Juan Basin Royalty Trust. Okay. Thank you for sharing. 8% dividend. Very nice. Let's see, what does it consist of? I have never traded it, but let's see. San Juan, is this Brazilian, what is it? San Juan. In Provision Express Trust Services, the company was founded headquarters in Houston. Investment Trust Mutual Funds. Sector, SJT, dividends, stop holding of SJT. Stop holdings of SJT. So obviously, if you it's you're betting on the outcome of elections in Brazil. I think it still hasn't been decided the way I understand. Well, you guys can research. I haven't traded, but chart looks I assume it has to do with Brazil, and obviously it's driven by elections, and I mean it's volatile, right? 30% up, 30% down. If the elections are not going to be pro market, then the drop will continue. And if it's positive, then the market will rally. I mean, it does look like it wants to rally. Thinking that. XOP in 2022, I think it will follow the market, right? I follow the market. Ideally, maybe there's a lot of overhead resistance. Maybe it goes 160, right? Drops into midterm elections. Then potentially XOP posting or even making new highs by end of the year. All right, Doug, thank you. Doug, thank you about PBR and when do you look for the next market leaders in big liquid stocks? I mean, next, if I'm right about the market, right? The idea that 10-year yield has to drop, right? 10-year yield kind of double top, right? We have this week we have this, maybe next week we have this, and then week after this, and this. Right, the only way market will rally if the 10-year yield drops below 3.5%, right? With the yields going to 4.5%, there will be no rally in oil nor in equity markets. So assuming that I'm right, and into the end of the year we're going to drop below 3.5%, that would be a signal to buy interest rate sensitive sectors, right? So cyclical sectors will rally, banks, consumer discretionary, materials, metals, technology. These will be the leaders. So it's the same trade. You can kind of see who rallied in this week, right? So XLF, right? XLF had a vertical move to the upside. Consumer discretionary had a vertical move to the upside. Transportation, right? Let's see, sorry. Right, transportation had a strong move. Industrials, right? Industrial had a wide. So in late cyclical sectors will rally the most. ENPH. I mean, the semiconductors, it's definitely outperforming. I think this is because of the green energy, right? If I'm not mistaken, they're doing semiconductors for electricity. Design macro system. Solar, right? So solar, green energy, and subsidies. It's an exception, right? This is not a ADM or Intel, right? They're building semiconductors for electrical cells. So this is an exception. XLU. I think XLU will continue to underperform, right? You can see based on the chart, it's underperforming cyclical names. And, if I have to guess, it will break through this level or, will at least continue to underperform, right? It's outperformed this year, but I would not chase XLU. I would rotate into cyclical names like, what I mentioned, March Solar. Thank you. All right, so obviously based on the answer 1 or 2, well, 2 things can happen, right? We called for 337, right? The model basically said we can reach 340 level, right? We can reach that level. So, I personally would be a buyer into these pullbacks. You can see today I actually start closing like short call of the credit call spread, right? So I have debit call spread on QQQ, right? So I have a debit call spread on QQQ. I close the short call because I think the rally will continue after November, right? I have a December position. So let's say you want to buy a stock at 367, right? So let's say you want to buy the market here, right? You have to determine what is the stop loss, right? You buy 367, you know, we're calling for 337. Your stop loss, right? Your stop loss is about 30 points, right? I would suggest if you, I mean, if you day trading by next Friday, we're probably not going to reach 337, right? But in 4 weeks or 6 weeks, we could, right? So 337, this is a 30 points to the downside. To the upside, you know, model also calls 395. So at this point, you have maybe 30 points to the downside, maybe 40 points to the upside. If you believe second scenario, you know, if you believe the one scenario that we're going to hold this low, maybe marginally low, right? This is scenario number 2, minus 30 points. Scenario number 1, you know, maybe we'll just reach the lows, maybe 350. So maybe minus 15 points. So you're either risking 15 points if you believe in scenario 1, or you're risking 30 points in scenario 2. I personally propose always be on the more conservative, right? You think about that it's going to be 15 points, at least assume it's going to be 30 points. All you have to do is you can still buy, but obviously you buy less. Why less? Because on average account is $10,000. I propose to risk only 2.5% of your portfolio per trade, right? That's $250. So this is kind of on a $10,000 portfolio. If you're doing day trading, you shouldn't risk more than $250. Day trading, you need to have $25,000, so it's less than 1%. $10,000, you should risk less than 2.5%, so it's $250. So the idea, if you're trading spiders or options on spiders, or if you're trading QQQ, or you're trading Rivian, or Forex, or options, or futures on options, or options on futures, and futures on options, there are so many, or triple leverage ETF or quadruple leverage ETF. Doesn't matter how much volatility you're looking for, right? A lot of people, especially the new beginners, they want something volatile, right? They want Bed Bath and Beyond that moves 50% every day. I mean, well, I assume it's because it's like a, right? I remember when I started gambling, first time in college when I went to casino, you know, you get excited and you just want to, you know, you want to go all in and you want to double your money every time, right? That makes sense, right? So innately, when we start our trading journey, we want something that is extremely volatile. As time moves on, you realize that, you know, highly volatile products, you have to be very experienced to trade them. So you usually do it when you're, you know, in the middle of your trading journey, or, you know, you've done it for a few years, because that's why you look for volatility. But in either way, whether you're looking for stocks that move 50% a day, or you look for stocks that move only 0.5% a day, the goal is not to lose more than $250 a day. Because if you do, I don't care what you trade, right? You know, I propose to only have 4 positions, right? So if you have 4 positions at $250, and the market, you thought it's scenario 1, but scenario 2 happened, right? Your goal is, if we do reach at 340, to be down less than 10%, right? If you're down less than 10%, then you can have an intelligent conversation. You can say, you know, whether this level will or will not hold, what has changed, and market overshoots and undershoots, right? Every time you think it's going to be, you know, this level will hold, it undershoots by 5%, right? It did it almost throughout this year. It did it in January, February, then it did it in April, July. So almost every time we reach some kind of a, every time VIX jumps to 35, 40, we undershoot by 5%. So even though I don't think it's going to happen, it might happen. So I encourage you to go on the, be more conservative. All it means is your position size have to decrease, right? If you think there's 32 points to the downside, well, you can only buy 8 shares. Yeah, you can only buy 8 shares, and that's your risk. If you trade in 15 shares, you know, you can buy more. You can buy 15 shares, right? So the size is different, right? It's 15 shares versus 8 shares. I encourage you, especially if you're new to trading or you're new to Tradespoon Yellow Tunnel, whatever you think it is, scenario 1 or scenario 2, you always go to the worst case scenario. You only buy 8 shares. And the advantage of this, if market does drop to 337, you're down less than 10%. Because if you buy 15 shares, what happens, especially to the new traders, they do put the stop here, market trades below, and they say, well, I'll wait. I think, you know, Vlad said that this is going to be low, so it will rebound. And then they wait another day, another low. And they wait till it drops to 340. They're down, instead of 10%, they're down, I don't know, 30%, right? They close all of their positions only to realize that instead of market rally, you know, after midterm election, they rally after, I don't know, Thanksgiving, right? Or in the beginning of December, right? So you basically close your position, you acquire 30% loss, incur 30% loss, and market rallies only after that. How many questions, how many people have experienced something like this, right? You thought the stop loss is 52-week low, market dropped by another 5%, you closed all of your long positions, very upset, very emotional, only to see, you know, market rally another 20% after that, or, you know, 15% after that. Anyone know what I'm talking about? Thank you, Doug. Mark, thank you. Nobody have experienced, you know, when the trade goes beyond your stop loss by more than 5%, where you would close all your position only to see. Todd, yes, I described your life, at least my past life. Okay. All right. The good news, you're not alone, right? If you think you're the only one who did this, well, guess what? I did this, and I guarantee you everybody on this broadcast did this, and everybody is experiencing that sooner or later. It might not happen in, you know, if you start trading, you know, in 2020, right? Or you start trading, you know, market never dropped, right? So for the past 2 years, you're a superstar, right? You're printing money because market never dropped 25% or 30%. So you've been conditioned and you never experienced 30% drawdown, right? And that's when you're a superstar, and then only to realize when the market does drop, you know, you probably lost more, or at least half of all your gains since, you know, you start trading. So it all depends when you start trading, right? And, you know, basically conditioning, right? Conditioning. And I always provide these examples, right? Almost every time during these extremes, drawdowns, right, you have big hedge funds that went bankrupt. Why do hedge funds go bankrupt, right? I mean, they have the smartest brains, you know, they have MIT, you know, top 10 schools with PhD degree and in physics, mathematics, they're, you know, Nobel laureates, and they go out of business, right? It happened during, I keep forgetting the names, but it happened during memes, you know, with the meme stocks, you know, hedge funds shorting meme stocks, or it happened, you know, with Russian ruble collapse in 90s. That was another famous. It happened with oil being negative, right? Oil dropping to negative, and and hedge funds go out of business. Why does this happen? Why do hedge funds go out of business? Does anybody know? I mean, they have the smartest people, they have the alpha, they have technology, they have millions, billions of dollars at their exposure, and they still go bankrupt. Well, for a very simple reason, right? You make an assumption, right? You make a certain assumption that certain event will never happen, right? You make an assumption that certain right? This is step one. You make certain assumption that certain things will never happen, and then the second step, your ego, right, precludes you from, right, making a rational decision, right? You cannot be wrong, right? This is, right, the story of our life. Not everybody's life, majority, but definitely until I realize why hedge funds go out of business or why I lose money is for that. I make an assumption, right? Market cannot drop more than 20%. Average recession is 40%. Market will not drop more than 40%. right? A lot of hedge funds, what they do stress tests, right? When I work at hedge funds, they make what if scenarios. There is a very expensive, very complicated models that do what if scenario, and they say, and they shock their portfolio, right? Spiders drop 20%, what will happen? And they rebalance. Spiders will drop 40%, right? What will happen? Or oil goes to zero, what will happen? They don't assume that oils can go to negative, or they assume that Bed Bath Beyond cannot jump 100% in 2 weeks. They make this assumption, they build their models around these assumptions, and they do not back down, right? And they make assumption that oil goes to zero, but you trade in futures and all of a sudden oil turns in negative, they still don't close, right? They kind of wait till the end, they get a margin call, and then game over, right? So you have to realize that you cannot assume that one will happen and two will not happen, right? You cannot assume that average recession is 40% and we're not going to have 50% drop. You can determine the stop levels based on your assumptions, but then when your assumptions are wrong, you can't have your ego telling you that, you know, this cannot happen, right? You have to make a rational decision and exit out, regroup, see what happens, right? So very difficult test. It's much easier to do it, to say it than to do it, right? I mean, everybody can say it, but to do it, it's a lot more difficult. So what are the tools? You know, first of all, one-on-one coaching. So we do have a coaching program. You have trading psychologist, Dr. Maneker. You know, you can get a coach. That's expensive, right? That requires financial commitment. I understand, especially when taxes are doubled. And so, okay. So if it's not coach, which I think if you do have, you know, I would strongly suggest coaching program that we have at Tradespoon, or at least journal. Journal is your coach. It's where you coach yourself, right? You write down your thoughts, and you know, when you make these assumptions and they go against you, the time moves very quickly. When you start writing things down, time moves very slowly, and you have time to analyze your thoughts. So I always encourage you to keep a journal, write down your trades, and grade yourself, right? If you follow your trading plan, if you said 1 is a stop loss, you exit out. If you said 2 is a stop loss, but it dropped below that and you exit out, you give yourself A and B. You decided to buy spiders at 365 or 366. It dropped to, you know, you put a stop loss 356, drop below 356, you give yourself B. If the market did rally after CPI data and it rallied after midterm elections to 400, you give yourself an A. Right? Or you give yourself C or D, right? If you said 1, right, and you bought 15 shares, it dropped to 337, you were stubborn, you didn't sell it, right? It dropped to 330 and then it rallied to 380 and you made money. At least recognize that you have violated the process that you set for yourself, right? And give yourself a C, right? Sometimes it happens, you buy 15 shares, you say 1, it drops to 337. You said, Vlad said 337 will hold. You were down, instead of $250, you were down $500, but then it did go in your direction. So at least recognize it's not because you are generated certain alpha, just realize that you just got lucky, right? I would say I'm lucky, you know, I prayed hard enough and, you know, my prayers were answered. So you give yourself a C, right? Or if it obviously from 37 it dropped to 320 and you capitulated, then you give yourself D and you write it down in the journal, you know, I will never do it again. I will never lose more than $250. You have to have certain principles, right? In trading, certain principles. I propose one of the principles, you never lose more than $250 per trade, no matter what happens, no matter who tells you what, you just don't do that, right? It's one of those things, you know, you just never do it. Right? I don't know, 10 commandments, right? You don't break 10 commandments ever. And if you do, then, you know, you have to repent really hard, right? But as long as you learn, then it's good. But if you make a mistake, you repent and then make mistake again, well, that's a problem, right? Trading is no different than following 10 commandments. So you have, I don't know if you have 10 commandments, maybe you have only 3 commandments, but, you know, you have to follow some kind of principles that you don't break. And the way to internalize this information is to journal, right? To journal and write this down. Okay, any questions? Thank you, Doug. Doug, thank you. Leverage, yes. Leverage does kill the hedge funds. Thank you, Doug, for kind words. Thank you for kind words. Since you did say, if you do have good comments, I don't know if you ever filed Trustpilot, but do me a favor, if you are following Tradespoon and you find the information that we provide is useful, I'm going to put it down, Doug, for you as a homework. Please leave us a good review. If you have a bad review, please don't leave it. A lot of people do tell me, "Oh, Vlad, I'm going to leave a bad review, and because you didn't give us a refund, or it took more than 5 minutes to give me a refund." Okay, please don't do that. We do have live chat, right? Always available during market hours. We always respond within 24 hours. We will, address your issue, and we'll make sure that you're happy, right? There's no reason to leave bad reviews. And we'll resolve any questions that you might have. But if you have good review, then please leave it. I take this reviews very serious. It makes my day. So if you do have something nice to say, please review it on trustpilot.com. I put the link. If you have some concerns, please go to chat and express your concern, and we'll make sure we'll address it. Also, another announcement is YouTube, right? One way, you should not trade alone, right? You should not eat alone, right? There's a famous saying, don't eat alone, right? Why don't you want to eat alone? Well, the same saying, you're going to die alone, right? Trading is no different, right? If you're going to trade alone, you're probably going to make mistakes, right? You're not going to die, but you're going to make mistakes, right? Financial mistakes that have financial consequences. So don't trade alone. You join some kind of a community. Tradespoon community, we have live trading room, we have professional traders, we have traders that are just started to trade, and we are exposing this on YouTube for free, right? So if you still haven't committed financially, I understand, this is my tax break to you guys. Join on Wednesday morning and closing bell. You never have to become paid subscriber, but at least every Wednesday and now every Friday, you can participate live, ask questions, maybe get good trade ideas, maybe get good hedging ideas, and maybe at some point this information will internalize and you will never be down more than 10%, right? My goal is for you to always make money, kind of a compounding investment, hit singles as opposed to home runs, consistently hit singles, consistently grow your portfolio, and never be down more than 10%. These are my personal goals, and these are the goals for everybody who is part of Tradespoon community, right? There is a way to do this. This is something that within your control, right? We talked about the economy of control. Those are the latest I borrowed from Stoic philosophy. Dr. Maneker, when he visits us, talks about, you can only control your own actions and your own thoughts, right? You cannot control anything else, right? So assuming you can control your action and thoughts, you should be able to control never to be down more than 10%. You should be able to control never to be down more than $250. You should control not to have more than 4 positions, and follow these principles, right? Follow these, your own commandments. You seal them, right? You seal them and you store them in something sacred, in FedEx envelope and you put it on your, safe, and you just don't break that, right? You have control over that. If you don't break that, if you break these rules, maybe you understand Stoic philosophy, but you don't practice it. So the only way to practice it is to internalize this information through journaling and participating in YouTube every Wednesday morning bell and closing bell and Friday. You do this for a few weeks, you do this for a few months, I'm going to guarantee you, I'm going to make that bold statement, your performance will improve, right? I'm going to make this bold statement, your overall performance will improve. You're going to get one-on-one coaching, your performance as the trader will improve even more so, even more so, right? So, but it all up to you, right? It's all within your control. It's not in control of, Jerome Powell. It's not in control of, unemployment numbers. This is all within your control. So please take advantage of that. All right, so we talk about YouTube, we talk about Trustpilot. What else do we offer at Tradespoon? Again, especially if you're new to trading, I propose to follow services where you can follow my trades. Premium portfolio, shadow portfolio, spread portfolio, elite trading service, robo-investor. They're all portfolios. Robo-investor is only stock. Shadow trader is everything that I trade. Spread is only spreads, right? Premium and spreads are only spread trades. Elite Trading Circle is everything, right? Elite Trading Circle basically will give you exposure, everything I do, real time. You can enter your phone number, you will get a text message real time. It's synchronized with my broker dealer account. It's not, this is not something I put on tweet and I don't do it myself, right? This is something I do in my own portfolio, and you know it within seconds, right? Or within a second, actually. And you can see different strategies. Conagra Food, I did, what are my favorite strategies? Again, it's selling out of the money premium, right? Selling out of the money premium. What is it? Trading with options. All the strategies are based basically on the same strategy, right? You have to think about bell-shaped distribution curve, right? Stock is trading here, right? This is a stock price, right? S&P trading at 365, okay? So what do traders do? They make certain bets. They look at one sigma deviation, right? They look at one sigma deviation or two sigmas, and they say by time, how much the stock can move, right, by certain time. You can do weekly options, right? I don't know if this is deviation, but I need third dimension is time, right? One sigma based on certain time, two sigma based on certain time. The most popular trades now are actually weekly options, right? And then you have monthly options, right? You have quarterly options, you have leaps, certain expiration. So you basically make an investment decision that basically says the stock, it will move from 365, when we talk about 357, right? 357 or 355 new lows versus 375. Well, that can happen, in the next couple of days or in 1 week. So you trade weekly options on 355 and 375, right? If you do monthly options, that range will widens, right? So now you have to think about 337, and 395, right? Can you reach 337 next Friday? Unlikely, right? Unlikely. Something really bad has to happen in the market. Can you reach 337 by end of October? Yes, very highly possible. One sigma move. So that's what trading is all about. If you want to follow my trades, Elite Circle, you do see I trade elite earnings strategies using weekly options. You can trade spiders, QQQ using weekly options. A lot of people trade earnings, they use monthly options. Totally fine, sure. You use calendar spreads, but it's the same idea. However you're going to structure it, butterfly, iron condors, you're basically making an investment based on your opinion that the stock will trade in a certain range by certain dates, right? You can do calendar spread if you think it's going to go up and down, right? If you're going to think it's going to just keep going in one direction, then you do verticals, but that's your approach. Neil, short-term Microsoft. Okay, so let me just finish the services before I answer that. So Elite Circle, I would start with Elite Circle. That gives you access to all of our tools. If you just want my trades, you can do Shadow Trader, right? Vlad's portfolio is another service. This is where you trade following my trades real time. If you just want ideas, active trader, weekly trader, monthly trader, right? Names implies day trading, weekly options, monthly options, or stocks. And we do have research. My favorite research, I haven't found anything better on the market, and if you do, let me know, is the stock forecast toolbox, right? It's doesn't have a lot of opinions. It's right most of the time in terms of directions. When is it wrong? When some new information arrives, earnings, unemployment numbers, Fed decision. The model cannot predict those. Hopefully by now you understand Stoic philosophy, that we cannot predict the outcomes of these binary events, but we can predict the trends. We can predict long-term trends that, we're in downtrend. The model does a very good job on this, and it's doing a good job telling you where the key support and resistance levels and what the direction is, right? A lot of models will tell you support and resistance, but they'll just tell you range. This model actually gives you range and the bias, right? Opinion on the direction, which is extremely accurate. All right, so these are, you can find under tools, services. All right, Neil, Microsoft. Microsoft, it follows scenario 1 and 2, right? Microsoft has to hold these lows, right? So I think my core scenario, we revisit the lows. Microsoft is one of the weaker technology stock. Maybe we marginally break through it in October, right? Right, but in the next, after midterm elections, we have a rally. Or maybe we'll get to 260, maybe still lower high. I don't think we're going to post higher lows. That's not the case, but there is my, and then in next year, right? This follows, regular waves iteration, right? So this makes sense to me. This is my core scenario, right? That's scenario 1. Worst case scenario, we don't have, maybe we, go after midterm elections and then go significantly lower a lot quicker. Individual stocks, it's a little bit different, right, than indexes. Obviously, Microsoft is a big component of spiders and QQQ. I can't imagine Microsoft going in different direction than or QQQs or spiders. But CEO can quit. They can have a scandal. So outside of black swan events that I have no control over, Microsoft should follow the QQQ. Google might underperform because exposure to the market. Microsoft can outperform because exposure to cloud computing, and that's one of the fastest growing, verticals in technology. So, but overall, they should follow the sector, the index. Doug, very impressive. Series 7, spent 3 years with major brokerage. Doug, thank you. Yes, net credit vertical put spread is very conservative. Thank you, Doug. Kevin, thank you. Tips, research vehicle. Thank you, Doug, for tips. Kevin, FedEx is lower. Yeah, and this is another perfect example, right? We all try to find stocks that outperform the market, right? FedEx was the perfect example where even in July, it was almost at 52-week high. So FedEx has outperformed the market. Utilities have outperformed the market, but that outperformance can only last so long, right? Any negative news, less shipments, and then FedEx is actually underperforming our market. Same thing with utilities, right? It posted new high this year in September, right? So everybody's falling into the trade. All it means is that, elevator up, elevator down, right? It's not going to be escalator up. In the bear market, it's elevator up, elevator down. So that's what I would be thinking about. And that's going to happen to all the sectors, right? The last one standing is oil, right? At some point, oil will be elevator up, elevator down, right? So that's why I personally do not want to pile into the oil trade, because it will be elevator up, elevator down, just like gas, right? At what point does, gas is going to drop 30%? Nobody can tell you, right? And if they do, they probably won't tell you anyway. But, people can speculate. But one thing I can tell you, that oil and gas will be elevator up, elevator down. And when you see it's elevator down, okay, maybe you want to get bullish. But when you see it at 34, you probably don't want to chase it. All right, it's 10:32. You guys have been awesome. There's no closing bell today. I am traveling Monday, bright and early. I'll be there. And have a great weekend. Enjoy time with the friends and family. You have to recharge, right? It's Friday. Usually I'm really tired on Friday. It's very important to spend quality time with your friends and family, read a nice book, listen to classic music, and be ready on Monday fully charged, right? Very important your, how much your battery is charged, right? If your battery charged 10%, you probably want to decrease the size of your trade. If you're 100% battery charge 100%, then Monday we're going to be up and running again. Thank you very much and have a great weekend.